Hello and welcome to the look ahead for Thursday, the 26th of June with me, Fiona Cincotta, Senior Market Analyst at City Index. So a bit of a busy day as far as US data is concerned. But before we get there, in the European session, we've got GFK, German consumer sentiment. We have plenty of Bank of England speakers hitting the airways. And then in the US session, as I mentioned, we've got jobless claims, GDP data, and also pending home sales. So let's just kick off with a quick look at the US, because this is a chart of the NASDAQ. Now, the NASDAQ rose to record highs, trading just briefly. It reached up to that 22,330 as a new record high. Now, as I said, data tomorrow, plenty US data drop, which is really interesting because it's turning attention quite quickly away from the Middle East and the ceasefire agreement, which is so far holding up between Iran and Israel, back to monetary policy. Obviously, we've had Federal Reserve Chair Jerome Powell testifying for the past 2 days before Congress, and back to US data. So jobless claims, they're going to be very much in focus because we have seen some sort of slight weakening as far as the US labor market is concerned. That's why we're looking at sort of for very timely figures concerning the outlook for US jobs. Actually came in at 245,000. GDP, it's Q1, so that data is quite stale now. It's a revision expected to confirm the 0.2% contraction annualized in that first quarter. And then there's also pending home sales as well, and durable goods orders, actually. So plenty to be going on. Now, this data comes at the same time that Federal Reserve Chair Jerome Powell spoke today, and really reiterated the same message yesterday as we heard last week, that the Federal Reserve is in no rush to be cutting interest rates. It's keen to see what the impact of Trump's tariffs are going to be on the inflation and on the economy before rushing to cut rates again. He's saying that sort of tariff-driven inflation remains a big question. Now, it's interesting because he also said yesterday that should inflation come in weaker than expected and the labor market show signs of weakness, then the Fed may be looking to cut interest rates earlier. That boosted rate cut expectations with the market pricing in 60 basis points worth of cuts this year. That was up from 50 just at the end of last week. Obviously, cooling oil prices because of the ceasefire in the Middle East is also helping that picture as well. So a lot of eyes are going to be on this data, particularly the jobless claims, I would say, and durable goods, for clues over the outlook for the US economy. This is the NASDAQ that we're looking at. Now, any sense that the Federal Reserve may be cutting interest rates sooner is considered to be positive as far as stocks are concerned. On this chart, what I'm looking at here is the golden cross signal. The 50 SMA is crossing above the 200 SMA as we see this price push higher. That's a positive. However, just need to look here. We've also got this bearish divergence on the RSI. So that's something to be watching. Although we've got that golden cross signal, we've also got that bearish divergence, which suggests that there isn't strong momentum supporting the price higher. As far as levels to be watching, if we do get a close above the 22,245, that was the previous all-time high. Sorry, yeah, 245, then that could really open the door to that 22,500 level, and above there 23,000 would be the next logical level to be looking for. As far as support is concerned, 22,000 round number, but it would take a fall below this 21,500 in order to create a lower low and then expose the 200 SMA at 2665. So the other area that we're looking at, we'll just have a look at GBP USD, because as I mentioned, we've got lots of Bank of England speakers. We've had plenty of Bank of England speakers, and we have more. But also the dollar's behavior. Obviously, we saw quite a weakening of the US dollar yesterday, as we saw those safe haven flows unwind surrounding that Israel-Iran ceasefire. US dollar has picked up a little bit today, but it does trade near multi-year lows, which is obviously supportive for the other currency pairs such as cable. Now, the pound has recovered from that. It dropped down to that 50 SMA low there, has recovered towards that 136 level, hasn't really managed to get above that 136 level. That was sort of the high that we saw back earlier in June. Now, we've heard from plenty of Bank of England speakers today, yesterday, including David Ramsden, who has noted concerns over the health of the UK labour market. He said there are signs of weakness, clear signs of weakness coming through. Even Bank of England Governor Andrew Bailey, although he said that sort of the outlook for interest rates he sees as downwards, he did also note that there could be some weakness in the UK labour market. Now, as far as data is concerned, we have seen the industry data is pointing to pay growth slowing considerably to below 3% in private sector, and that's below inflation, which is 3.4%. And also job vacancies are falling. Now, let's not forget that this comes after the increased burden on the employer for national for tax, and as the minimum wage also rose in April, so that's putting pressure on employers. But this is the level, 136 is the level. I mean, this uptrend that we've seen in sterling US dollar very much intact, but we do need to see a rise above that 36 level in order for us to get that 37.50 level, the February 2022 high, back into play. On the downside, you've got the 20 SMA there. It's also the lower band of the rising channel around the 135.25 level. Going to take a fall around the 134.50 level to create a lower low. That's also where we're going to find the 50 SMA. So lots of eyes on Bank of England speakers to see whether they add slightly to that slightly more dovish stance that we're starting to hear from the central bank. And then finally, we've also got German GFK consumer sentiment. That is expected to improve slightly from negative 19 to negative 19.9 to negative 19.3. This is the DAX. Now, interestingly, we saw US stocks have risen to record highs. DAX is struggling. So we saw it at those record highs at the beginning of June, and then it came down here down to the 23,000 level across the month. The recovery is struggling at the 20 SMA. So we need to get a move above that 23,800 to bring the 24,000 into focus. And on the downside, you've got support there at 23,365. Now, data tomorrow, consumer confidence isn't necessarily market moving data, but it does help to paint a picture as far as the outlook is concerned for the German economy, which is starting to show signs of life after several years of contraction. So also we've got increased defense spending. NATO have increased defense spending by 5%. So defense stocks are very much in focus across the region. And then obviously also we've got the Trump trade tariffs are still very much lingering at the back of traders' minds, but we're moving closer towards that 8th of July cutoff date. So we should be finding out sooner rather than later what will be happening as far as tariffs are concerned. So I hope you've liked everything that we've talked about here. And if you have, then please do give this video a like. And for more videos like it, then please do subscribe.